Welcome to Smart Stock Watch. Today is April 24th, 2025, and we're diving into the first quarter earnings report of Las Vegas Sands, a leading global developer and operator of integrated resorts. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Las Vegas Sands has been a key player in the integrated resort industry, and their Q1 2025 earnings report provides some interesting insights into their current performance and future prospects.
Revenue and profitability overview. Let's start with the top line. Las Vegas Sands reported a net revenue of $2.86 billion for the first quarter of 2025. How does this compare to their performance last year?
While the net revenue saw a slight decline from $2.96 billion in the prior year quarter, the company still managed to achieve a net income of $408 million. Operating income was $609 million, down from $717 million last year. The consolidated adjusted property EBITDA was $1.4 billion, indicating a robust operational performance despite the revenue dip.
What factors contributed to these results?
The decline in revenue can be attributed to softer market growth in Macao. However, the company's strategic investments in both Macao and Singapore have helped maintain strong profitability. The Marina Bay Sands in Singapore, in particular, delivered outstanding financial performance.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 60 cents for Las Vegas Sands based on a survey of 6 analysts. How did the actual results compare?
The adjusted earnings per diluted share came in at 59 cents, which is slightly below the forecasted 60 cents. This minor miss can be attributed to various factors, including increased development expenses and a higher effective tax rate compared to the previous year.
Does this EPS miss significantly impact the company's outlook?
Not significantly. The miss is marginal, and the company's strong cash flow and strategic initiatives in key markets like Macao and Singapore continue to support a positive long-term outlook.
Strategic initiatives and market performance. John, can you elaborate on Las Vegas Sands' strategic initiatives and how they are performing in different markets?
Absolutely. In Macao, the adjusted property EBITDA was $535 million, despite a $10 million negative impact from low hold on rolling play. Meanwhile, Marina Bay Sands in Singapore reported an impressive EBITDA of $605 million. The company is also actively returning capital to shareholders, having repurchased $450 million of common stock and increasing the stock repurchase authorization to $2.0 billion.
How do these initiatives position Las Vegas Sands for future growth?
The company's focus on enhancing its properties and service offerings in Macao and Singapore positions it well for future growth, especially as travel and tourism spending in Asia expands. Their financial strength allows them to continue investing in these markets while also exploring new opportunities.
Financial strength and capital management. Let's talk about Las Vegas Sands' financial strength and capital management. What are the key highlights here?
The company maintains a strong financial position with unrestricted cash balances of $3.04 billion and access to $4.44 billion revolving credit facilities. They have also entered into a new SG $3.75 billion term loan facility to support the Marina Bay Sands expansion. Additionally, they continue to reward shareholders with a quarterly dividend of 25 cents per share.
How does this financial strategy support their overall business objectives?
Las Vegas Sands' robust cash flow and access to capital allow them to invest in growth opportunities, manage debt effectively, and return capital to shareholders. This balanced approach supports their long-term strategic objectives and enhances shareholder value.
Key takeaways. In summary, Las Vegas Sands reported a solid performance in Q1 2025 with net revenue of $2.86 billion and an adjusted EPS of 59 cents, just shy of analyst expectations. The company continues to focus on strategic investments and shareholder returns, with a $450 million stock repurchase and an increased authorization to $2.0 billion. Thank you for joining us, John.
Thank you for having me. Las Vegas Sands is well positioned for future growth, and their strategic initiatives in key markets are promising.
Thank you to our viewers for watching. If you enjoyed this analysis, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Las Vegas Sands' performance in the comments below.